Hi students, I am Professor Vikrant Palatsha. I welcome you all in my YouTube channel. Today we are going to discuss about the introduction of auditing, which is the first unit in the syllabus of TYBCOM. So without wasting much time, straightforwardly we are starting our discussion. So first of all, in that, what is the meaning of the auditing as well as what is the definition of the auditing. So the word audit is derived from the Latin word audire, which means to hear. Auditing is an evaluation of person, organization, system, process, enterprise, project or product. The term most commonly refers to audits in accounting. Auditing is a thorough, systematic and analytical examination of accounting record of the client. So in general, auditing starts when the work of accounting ends. So auditing is the next step of the accounting. Under the accounting, the different records of financial records are prepared. Different kinds of accounts are prepared. Different kinds of documents are maintained. But we know accounting is a very vast process. Therefore, there is a chance for the number of errors as well as for the frauds. Why? Because there is involvement of the finance and money, and whenever there is a involvement of finance or money, at that time there is a chance of frauds, as well as numerous transactions are recorded in the books of the accounts. Therefore, there is a chance of error. So therefore, the statement those are prepared, the finance statement those are prepared, they are not showing the correct result. Therefore, what is done under the audit? All those statements are verified, cross-checked, and therefore this thorough examination of cross-checking, verifying, examining is called as what? Is called as the auditing. Understood? So there are some thinkers, auditing thinkers, accounting thinkers. They have given here the definition of the auditing. Under that, the most useful definition mentioned by the Institute of Chartered Accounts of India. What is that? Audit is the independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. So it is what? It is the independent examination of the financial information, and financial information is always maintained where? Under the accounting. So it is the independent examination of various accounts prepared to express the opinion thereon, that is called as the auditing. Okay. Then the next definition is given by J.R. Bartley Bowie. According to him, auditing is an intelligent and critical scrutiny of the books of accounts of a business with the documents and vouchers from which they are written up, for the purpose of ascertaining whether the working results for a particular period as shown by the profit and loss account, and also the exact financial condition of that business as reflected in the balance sheet are truly determined and presented by those responsible for their compilation. So if we summarize this definition, so it comes, auditing is what? It is the intelligent scrutiny, intelligent examination of the books of accounts as well as the profit and loss account, draw from that such a profit and loss account is showing the exact information, as well as balance sheet is producing the real financial position of the business organization. The examination of this is called as the auditing. So from this we can prepare a summary definition, and this definition is what? Auditing is the examination of books of accounts including the final accounts which shows the exact position of the business organization as well as its find out the errors and frauds. Those are in the financial statements and documents. That examination, that scrutiny is called as the audit. Understood? So in this way, it is the meaning as well as it is the definition of the auditing. Now, in the next part, we have to discuss what are the objectives of the auditing. So there are two types of objectives. First one is the main objective, that is also called as the primary objective, and second one is the secondary objective. So what is the main objective of an auditing? So main objective of an auditing can explain with following points. expression of expert opinion. An entity prepares balance sheet to portray its financial position. It also prepares P&L account to disclose the operating result in the terms of profit or loss. The auditor checks them in careful manner with utmost diligence and professional competence. He verifies that the accounts are prepared within the framework of recognized accounting policies, and such accounting also shows the results, the accurate results. That is the primary objective or main objective. Means what? Expression of expert opinion. That is the first objective of the auditing. Already in the definition, what we discussed, auditing is an examination of the financial records of the business organization. So various financial records are prepared there. P&L account is there, which shows the operating results of the organization, as well as the balance sheet is there, which shows the exact financial position of the business organization. So auditor examines these statements to verify that these statements are prepared according to the accounting norms, and these are showing the real factful information about the business. Okay, so it is the primary objective of the accounting. Now secondary objective, under that the main point is what? Detection and prevention of errors as well as fraud. So various transactions, number of transactions recorded in the books of the account. While recording those transactions, some kinds of errors are there, and whenever the errors are there, the books of accounts can't show the exact information. Therefore, such errors are finds out under the auditing, as well as many kinds of frauds are also there. Okay, frauds means what? There is a intention, some kind of intention behind. Therefore, these frauds are also caught up under the auditing. That is the secondary objective of the audit. Then specific objective emphasizes that the term audit should not be taken to imply financial audit alone. In the definition topic, the audit may encompass other areas like review of operation, performance measurement, cost records, and so on. So other than the checking of financial records, detection and prevention of errors as well as fraud, there are some another kind of objective also, means how the operations are performed, what is the performance, what are the cost records. These objectives are also there behind the audit. Understood? So therefore, these are the various objectives of the audit. Now the next part, it is what? Advantages of the auditing. So auditing is a very good process from the business organization, and certain kinds of advantages are there. First kind of advantages, there are category of the advantages. First category, that is the advantages to the business. So number one, careful and systematic maintenance of books of records. So the books of records maintained by the employee, means by the accountant, those are verified at a regular interval and regular manner. Therefore, whenever these records are prepared by the accountant, very carefully accountant is preparing the record. That is what? That is the first kind of advantage to the business. Then early detection of errors and frauds. Already we have discussed under the objective. Errors finds are detected, as well as frauds are caught up from the records. That is also one of the objectives for the business organization. Determination of tax liability. Tax liability of business for income tax, sales tax, and such other taxes can be easily determined on the basis of audited accounts. The audited accounts are acceptable by the tax collection authority. So whenever the tax authority is imposing the tax on the business organization, they are demanding the audited records, and therefore the exact tax liability of the business will be calculated. That is again one of the kind of the advantages to the business. Determination of value of business. There are situations such as mergers, acquisitions, amalgamations, where the consideration is based on the value of a business. Value of business can be done more effectively on the basis of audited statements of accounts. So in the life of business, there are the activities like mergers, acquisition, amalgamation, and that in such situation the purchase price is calculated, and for determining the purchase price, the exact value of business is necessary, and this can be easily calculated from the audited financial record. So, and then it facilitates borrowing transaction. So it enhances the borrowing power of the business organization. Why? Business is borrowing the money, finance from the financial institution, and whenever the financial institution grants such borrowings or finance to the business organization, they are demanding what? They are demanding the audited records, and therefore, with the help of the audited record, easily business organization can get the loan. So therefore, it is the advantage to the business organization. Then next type, that is the advantages to the owners. So first of all, sole proprietorship. In a proprietary business, audit is compulsory, subject to turnover limits as per the Income Tax Act. Audit is not compulsory for the sole proprietorship business, but if they want the various benefits of the auditing, they can do the audit, and therefore it will provide a benefits to the sole proprietorship. Partnership firm. For the partnership firm, it is not compulsory, but if they if there are many accounting adjustments between the partners, such as admission of a new partner, retirement of existing partner, death or insolvency of a partner, dissolution of firm, etc. In such condition, if the business organization means partnership firm, they want a proper profit sharing ratio at that time, auditing will provide a very good kind of benefit to them. Therefore, it is beneficial. Joint stock company. Auditor plays an indispensable role in the company form business organization. In a company, there is a separation between ownership and management. Auditor is appointed by shareholders to ensure that the interest of the shareholders is protected. And therefore, it is the benefit for the joint stock company due to the audit, cooperative societies, trust, etc. Organization of this type are managed on the funds collected from general public. It is possible that such funds may be used for the individual benefit of the members of managing committee. Generally, the organizations are incorporated for a specific object. Therefore, it is necessary for such organization to appoint the auditor, and then auditor will verify all the records. Okay. And then the last one, other kind of advantages. Other advantages of auditing. Comparison of audit, comparison of accounts. So comparison of accounts is also possible due to the audited statement. So what is the position of accounts in a previous year that should be compared in the current year, and this is possible due to only the auditing. Disclosure of accounting standards. So it is necessary for a company, for business organization to prepare their accounting records as per the accounting standards. So whenever these records are verified, it is also true that these records are prepared as per the accounting standards, and this is the benefit of the auditing. Audited data as an evidence. Audited data is a very good evidence in a kind of legal situation. Therefore, it is the benefit of the auditing. And valuation of goodwill. Goodwill is properly measured with the help of the audited statement. So in this way, these are the various advantages. Now the next one, that is the limitations of auditing. One hand, there are some advantages. On the other hand, there are some limitations also. First one is want a complete picture. The audit may not give complete picture. If the accounts are prepared with the intention of defraud others, auditor may not be able to detect them. So this is one of the kind of the serious limitation. So if the account for purposefully the accounts are prepared in the wrong manner, then again it is difficult for the auditor to detect the frauds from such kind of account, and then auditor can't give the complete picture of the organization. Problems of dependence. Sometimes the auditor has to depend on explanation, clarification, and information from staff and client. He may or may not get correct or complete information. So the role of the auditor is dependence. Auditor wants explanation, clarification, information from the staff, but the wrong information is provided to auditor at that time. It is difficult for auditor, okay, to give the exact position of the business organization. Post-mortem examination. Auditing is the post-mortem examination. It is not a real-time work. There is no use of such examination when events have already been occurred. Okay, existence of errors in the account. In audited accounts, it is not possible for the auditor in all cases to check each and every may be error in the audited accounts even after the checking by the auditor. So number of transactions are there, and auditing is the time bounding work. So in a limited time, it is not possible for the auditor to check each and every transaction. Therefore, it puts the limitation on the work of the audit. Okay. So in this way, these are some kind of important limitations. Now the next one, we have to discuss the very important point of this unit, that is the classes of audit, means types of audit. Now it is the chart. According to this chart, these are the various types of the audit. So there are total 5 major types: based on authority, based on scope, third one is based on time, fourth one is based on offset, and fifth one is other types. So under the first, means based on authority, there are 3 subtypes: statutory audit, non-statutory audit, and internal audit. In the next one, that is based on scope, there are 2 types of audit: complete audit and partial audit. In the third, based on time, there are 3 types: subtypes: continuous audit, final audit, and interim audit. The next one, fourth, based on object, there are 4 types: so special audit, cost audit, management audit, and social audit. And in the last, fifth one, that is other types, there is a balance sheet audit, occasional audit, audit in debt, cash audit, and operational audit. Now in detail we have to discuss this. First of all, based on authority, there is a statutory audit. So audit which is compulsory according to the act for the organization, that kind of audit is called as a statutory audit. For example, for companies, according to the Companies Act 1956 or 2013, it is compulsory to get their statement audited. Then cooperative societies as per the Cooperative Society Act, banking company as per the Banking Regulation Act, for insurance companies. According to the Act, these organizations are registered. It is necessary for them to get their books of account audited, and this kind of audit performed is called as a statutory audit. The next one is a non-statutory audit. It is a voluntary audit. It is optional and not compulsory. There is no specific law which governs for conduct of such audit. Audit of individuals, firms, private trusts are the examples of non-statutory audit. So it is according to the will of the organization when it is performed, that kind of audit is called as a non-statutory audit. Internal audit. This type of audit is also optional. It is not compulsory. It is conducted by the internal auditor who is appointed by the proprietor and who is the regular and permanent employee of the organization. And to this employee regularly checks the books of account. This kind of audit is called as the internal audit. Okay, so it is as per the type number 1, that is based according to the authority. Then based on scope. According to this, there is 2 types: complete audit and partial audit. In the audit, each and every transaction of the business is verified by the auditor. That audit is called as a complete audit. And partial audit means very few transactions. Means as per the sampling method, the very few transactions assessed by the auditor is called as the partial audit. Okay, understood this? So in this way, it is the partial audit. The next one, based on time. So continuous audit, depending upon the size of the business, its turnover, the audit work may be carried on only at the end of the accounting period or may be done throughout the year. In large concern, audit work is practically conducted throughout the year. Means continuously the audit work is performed. That kind of audit is called as the continuous audit. Then final audit or periodic audit. It is also known as periodical audit. It is a very general type of the audit and very popular type of the audit. At the end of the financial year, this kind of audit is performed. That kind of audit is called as the final or periodic audit. Okay. The next one, that is the interim audit. Exactly in the middle interval of the financial year, the audit is performed. That audit is called as the interim audit. Okay, understood? So it is based according to the scope. The next one, that is based on object. Okay, next type, that is the based on object. Under that, the first one is what? Special audit. Under section 233, the Companies Act 1956, the central government has power to direct special audit under the following circumstances. So according to the Companies Act 1956, as per the section 233A, this type of audit is conducted. Number 1, when the financial position of the company is such as to endanger its solvency and when affairs of any company are not managed as per the sound business principles. So in such condition, the central government has the power to direct a special audit and the audit is conducted that is called as the special audit. The next one, cost audit. It is a type of audit which involves verification of cost records maintained by the organization under Section 233B of the Companies Act 1956. Such kind of audit is called as the cost audit. Under this, the cost records are verified by the auditor. Then management audit. It is the most modern technique of audit. This type of audit which involves examination of plans, policies, procedures, methods and strategies of the look into the past, present but also in the future. Whenever the managerial functions performed by the management, those are verified. Such kind of audit is called as the management audit. Then social audit. It is also a new type of the audit. Any business can survive only when it provides services to the society. And nowadays, according to the Companies Act 1956, it is necessary for business organization to perform a various kind of corporate social responsibility, and for that the special fund is raised by the organization. So whenever regarding the corporate social responsibility activities, the audit is done by the auditor is called as the social. Understood? And now the last one, that is the other types of audit. Under that, number one is the balance sheet audit. So the audit of the balance sheet is of the asset as well as the liability is called as the balance sheet audit. Okay, then second one is the occasional audit. So when the organization feels that it is necessary to conduct the audit and when occasionally they are conducting the audit, that audit is called as the occasional audit. The next one, that is in-depth audit. When the auditor is verifying all the records of the business organization in depth, each and every transaction is verified by the auditor. That audit is called as the in-depth audit. The next one is the cash audit. It is a partial audit and not complete audit. In this type of audit, the auditor examines the cash transactions only and verifies what are the cash receipts and what are the cash payments. And last one is the operational audit. It is conducted to see that the business operations are improved in future. It is a review of the operational activities of the business organization. So this kind of audit is called as the operational audit. Okay. So in this way, we have verified the various types of the audit. Okay. So it is the first part of the introduction of auditing. In the next part, in the second part, I will explain you the remaining topic points related to the introduction and principles of the auditing. So bye for now. Kindly check more videos like this on my YouTube channel. I request you to subscribe the channel as well as like and share the video in more